Hi, and welcome to the webinar where we will be discussing the ETI changes that are required from a payroll perspective. The items that we are looking on is when it's best to load the update 5.4b, then briefly discussing the ETI payroll changes, and then also looking at the TERS payroll extract. The update should be loaded before finalizing the payroll for April in order for the new ETI values to calculate and be included in the EMP2R1. If you're a weekly or a bi-weekly company and you've already processed for the month, you may be halfway through it, it's fine to load the update as the ETI calculation only happens at the end of the month, so when you are in your final processing period. So in a weekly company, that will typically be when you are in week 4 of 4 or 5 of 5, and in bi-weekly companies, that will be when you are in week 2 of 2 or 3 of 3. So once the system has been updated and you access the company for the first time, an on-screen message will display and list all the changes in the update. You will notice that at the bottom of the screen there is a little tick box against I acknowledge and don't show this message again. So unless you tick the checkbox to indicate that you have read the message, it will display each time you log into the company. Let's have a look at the ETI payroll changes. None of the ETI relief measures apply to employers who are or will be registered as an employer with SARS after the 1st of March 2020. The only change that we've built into the system is on the basic company information screen on the ETI tab. There is a new indicator for additional ETI relief. Now, when you load the update and during the conversion process, this will automatically be set to yes. It is therefore extremely important that if you do not comply and you cannot be eligible for this additional relief as you were not registered with SARS after the 1st of March 2020, you need to go and untick that block. Most of you would have already seen this, but it's just a snapshot of the incentive amendments. The only change that's really come in here is with regards to the age bracket of 30 to 65 years that's been added, and also employees that would have completed their 24-month qualifying will now additionally qualify for the periods of April to July. And then also for your first 12 months, your employees that earn between 0 to 1,999 Rand, that will be 500 Rand. Same with your second 12 months. So that is the change in there. And then the bracket between 2,000 and 4,499. It's gone up from 1,000 to 1,500, and in your second 12 months, it's gone up from 500 to 1,000. Same with the last bracket. The formula has changed, so the 1,000 became 1,500 Rand, and the 500 became 1,000 Rand. So all the changes have been noted in purple. For illustration purposes, we have taken snapshots from one of our desktop applications. So if the screen looks slightly different to what you use in your payroll system, don't be alarmed. The calculations are exactly the same on Payroll Professional, Sage Classic, as well as Sage Premier. This is just to give you an illustration of what would the ETI calculation have been in March and what is the ETI calculation now in April, and it's clear that we can see that there is an increase. This is also just an example to show you that employees that exceed the age of 29 in the past where they would not have qualified, that you can also see besides for the age as well, the people that went over their 24 periods, in March it shows here that they've already completed those 24 ETI periods, whereas in April the message has now fallen away and they do qualify again. As mentioned on the previous slide, the employees that exceed the age of 30 that previously wouldn't have qualified now do qualify, and these are just print screens to give you an example so that you can see the difference between what happened in March and what will now be happening in April. Before I move over to the TERS payroll extract, I just want to mention a few things with regards to the ETI calculation. On the support desk, we have received numerous queries where clients are asking, but why now that all the employees are earning well below the R6,500 threshold as stipulated as one of the qualifying criteria for ETI, there is no ETI calculating for the employees? So one of the things that we need to take into consideration is that besides for the change of the 30 to 65-year-old age bracket that has now been included in the qualifying criteria, all of the other qualifying criteria still remain in place in terms of when will ETI calculate. So that means the employee has to be between the age of 18 and 29 and now between 30 and 65. They need to have been employed after the 1st of October or from the 1st of October 2013. If it's a South African resident, then they need to have an ID completed and the valid ID tick has to be on. It cannot be a domestic worker, it cannot be a related employee, and if it is a refugee, an ID number needs to be completed. If it's an asylum seeker permit needs to be completed. And also one of the important ones is that if an employee has worked their 160 hours, they need to earn it below R6,500 remuneration, and if they did not work a full month, then the 160 hours will be grossed up. So on this point, I also just wanted to pause. Most of us that have been claiming ETI would have not in the past flagged or linked any information for employees that exceeded the age bracket. So all the guys that are 30 years and up, we wouldn't have maybe flagged the valid ID, or we wouldn't have linked them to a minimum wage. So it's extremely important that we must keep it in the back of our mind that you might be required just to review your ETI setup and to make sure that these guys are linked to the relevant fields if they have not been linked before. Then with regards to the remuneration, so if you are paying your employees less, so they receive below R6,500 a month, but they are still working 160 hours or more, your ETI setup is the same and nothing else has changed, then yes, ETI will still calculate. If, however, you are paying your employees short time or reduced hours, and they are also being paid below the R6,500 remuneration, it is important to take note of one of the qualifying criteria that if an employee hasn't worked a full month, that a gross up calculation needs to take place. What this means is, if for example an employee generally earns R8,500 a month for working 173 hours, now only works 100 hours and gets paid R4,900. Those 100 hours are divided into the 160 hours and will calculate what we call an ETI factor. This ETI factor is then used to do a gross up calculation to say that if the employee would have worked 160 hours, what would the remuneration have been? So this rate factor of 0.625 is then divided into the R4,900. And the result is that the employee exceeds the R6,500 remuneration, resulting in that the ETI will not calculate. The other question that we also received on support was that employees are receiving the TERS payment. The TERS payment is below R6,500, but now no ETI is calculating for any of the employees. Why is that? As communicated in one of our documents called the Covid-19 relief for payroll, we mention in there that the TERS payment is not seen as remuneration. Because the TERS payment is not seen as remuneration, for ETI purposes, the remuneration will be zero. And because there is no remuneration, no ETI will calculate. So those are the only two things that I can mention at this point in time that you need to take into consideration when looking at your ETI. We have also noticed that when people load the update and they activate force pay, certain recalculations do not take place properly. It's always good that if you know an employee under normal circumstances qualified for ETI, meets the required criteria and no longer qualifies, to go to their payslip screen, click on the ETI button, go to the Details tab, select your year 2020, and then select the month. On the right-hand side at the bottom, there's a comments block. Go and review the comment. Does it say exceeds the remuneration? Maybe that there's no hours captured. There will be information in there to guide you as to what the issue could be. And then from there, we can maybe just link or unlink them to the hours if no hours is reflecting from the basic company information screen, just so that the system can recalculate again. If we now look at the TERS payroll extract, this is just to refer you guys to the Sage City post where we have released the report that needs to be imported into Sage Business Cloud Payroll Professional. Along with these files comes the instructions on how to run the report and which relevant selections need to be made. So at this point, I also just want to stop and refer you to the note there where we stipulate that we have never really received final clarity on the fields in the file. So if you run this report, you would have noticed that under the UIF remuneration, we had 3 various options available for you to select from. Now, subsequently to creating the slideshow, we actually received updated information where it was specified that the UIF remuneration refers to the UIF remuneration as defined in the Unemployment Insurance Contributions Act, and that would have been the remuneration that the employee received prior to the lockdown month. And the other one is the remuneration paid during the lockdown period or the leave period. And that will be the employee's normal UIF remuneration. So whatever you would have paid the employee in cash or any other taxable benefits. This concludes this presentation. If there are any other questions that you have, we would recommend that you reach out to us on one of our support platforms. But also keep a note that on Sage City, we strive to keep you guys updated as and when we receive information. If it seems that there's a delay in us communicating anything to you, it's because we are still waiting for clarification from any statutory bodies. We hope that this presentation will be useful and that some of the information shared with you today will help answer a few questions. Thank you very much for your time.